Welcome to Investing Insights. I'm your host, Ivana Hampton. Macroeconomic conditions are squeezing U.S. airlines and travelers just in time for the summer travel season. Higher fuel costs due to the conflict in the Middle East are pushing up ticket prices. The latest Consumer Price Index report showed fares rose about 3% in April. Meanwhile, choices for cheap seats decreased when Spirit Airlines went out of business in May. The ultra low cost carrier blames soaring energy prices. What does this uptick in energy inflation mean for airline profits and travelers' wallets? Nic Owens is an equity analyst for Morningstar and covers the North American airlines. Thanks for being here, Nic.
Thanks for having me, Amanda.
Can you talk about how the spike in energy prices is affecting the airline industry overall?
Yes. Generally, a spike like that, unanticipated increase in fuel costs, in the short term, it's bad for the airlines because they have to fill the planes at more expensive fuel than they anticipated. But even weeks after, they adjust their ticket prices usually to accommodate the fuel price. The only concern is that if the fuel price stays high for a really long time, then higher fuel ticket prices might keep people away.
How have carriers changed their profit outlooks for 2026, and how does it line up with your forecast?
They pretty much to an airline on the Q1 earnings calls lowered or kind of backed away from their initial 2026 profitability. You know, they admitted that Q1, really March, it affected them badly, and nobody knows exactly how long fuel will stay this high. I also lowered then some of my forecasts, and I had already thought that there might be less growth in 2026 than 2025, in a way for separate reasons. But this is kind of turning into making that come true.
Let's talk travel demand. How do you think this year's travel season will compare to last year?
It probably will be mostly the same. So far, like through March, even about the same number of people, about 2% more actually, people were getting on planes. There's a couple of weeks at the end of April, early May that do look slower. But on those earnings calls, the airlines said they weren't seeing people, even though they had raised prices already, they weren't seeing people walk away. And the biggest airlines, the most profitable ones like Delta and United, they have, let's say, price insensitive customers, loyal business travelers, et cetera, who so far, at least according to those reports, have not turned away.
It remains unknown when elevated energy prices will decline. Can you talk about how far in the future airlines tend to buy their jet fuel?
It turns out that in the U.S., airlines really don't do that anymore. They used to. It's expensive, and if the fuel prices go down, then you lose money if you've locked in those future prices. So they more or less all just look at the futures curve and estimate what the fuel will be, and they, like I said, they essentially are protecting themselves by putting the fuel cost into the future ticket price.
Now, Delta, United, American, and Southwest Airlines make up the big four. Who's the most and least vulnerable in this environment?
I think that's an interesting question because it correlates exactly to their profitability. So Delta and United are the most profitable, and so they can absorb the fuel costs as a percentage of their, let's say, profit is smaller. American is a little bit less advantaged. They're still recouping market share from business travelers that they had lost a year or two ago. And Southwest is also sort of rebuilding from being in a competitive tight spot between the big guys and the low-cost providers. And so they're arguably the most vulnerable at this moment. But I think it's worth pointing out that they, like I said, they all kind of see the same fuel costs in the market. And so far, they've also announced that they are reducing their capacity growth plans. So that's a way of preventing, if demand were to dry up a little bit because the prices are higher, they're putting less seats out there. So they're trying to prevent it destroying their pricing.
Spirit Airlines offered a cheap way to fly for bargain seekers before shutting down. Do you think any of the big four will compete for Spirit's former customers, or do you think it's more likely a budget carrier will swoop in?
Well, both. I would argue that the big carriers did a good job in the last, say, 5 years of creating a product, a basic economy in what I think of as the back half of the plane that was competing with the Spirit and Southwest. A basic kind of bare bones fare that's comparable. And in fact, those carriers would generally give you a little bit something more, like maybe some cookies or whatever that you would have to pay for on Spirit. The and so within that, Spirit was not able to compete. They were not able to be profitable, especially when the fuel price spiked because they couldn't raise their prices. That their brand is so connected with having the lowest price. Other budgets like Frontier are definitely going to take some share. And the big airlines all offered kind of discounts to pick up passengers who were stranded when Spirit closed up. And my guess is they hope to get a new customer that way.
What can travelers do now to save on their flights?
The cheapest days, I think, are Tuesdays and Wednesdays. Early morning flights are less popular. That's a way. I mean, so the general price has gone up, but there's still places you could find, let's say, relatively cheaper tickets. Um, and also, shop around. The aggregators do a great job of giving you all the apples to apples seat prices.
Now, a social media campaign is building to bring back Spirit Airlines, and it appears support is growing for this. What does it take to revive a shutter carrier?
Yeah, I think there's two things I'd want to cover there. What it takes to revive a carrier would be you could theoretically buy the company, and if you need the airplanes and landing slots and staff. What's happened with Spirit is they were already bankrupt twice in the last couple of years, and bankruptcy means they stay in operation and they get to renegotiate their leases or contracts and other things to try to save money and be viable. The whole principle of our bankruptcy system is that, let's say, a flying airline is worth more than a dead one. But basically, they hit a wall where they couldn't even restructure their debt and other things enough, especially with the spike in fuel prices, to survive. So they're more than bankrupt. They are now out of business, and those airplanes are getting repossessed, redeployed. They're going to get auctioned to other airlines. I guess is the landing slots similar story, and the staff are, I think, interviewing with other airlines. So even if this campaign succeeds, I don't know how much is going to be left to take over, honestly.
That's important to keep in mind. So you recently lowered several airlines' fair value estimates or what you think the stocks are worth. Can you talk about that?
Sure. The earlier in March, I made some changes to actually increase the fair values to give them more benefit of future tax credits. Basically, you get deferred taxes when you buy equipment like airplanes, and then I also redid our global forecast for travel growth and updated kind of the share of the U.S. travel market as part of the global travel market. Which is sort of on a long-term downward trend, only because other parts of the world are growing faster in terms of air travel, and that had the effect of lowering my fair values to at the end of March.
Among the airlines that you cover, are any of them undervalued or worth watching?
The short answer is no. United and Air Canada, which I also cover, are fairly valued in my view, and the others are between 17 and 40% overvalued. I think the main disagreements I have with investors in the market is that some believe that these credit card arrangements where they sell mileage to credit card companies in advance is sort of like a perpetual money machine, and I don't see it that way. And the other idea might be that I think people think of the airlines doing pretty well right now, especially companies like Delta, and that could go on indefinitely. And I still see the industry as quite cyclical. And if there were some kind of a recession or renewed price competition, it would really erode profitability.
What's the takeaway for travelers and airlines as they both prepare for a more expensive summer travel season?
Like I said, the main concern on the airlines part is just if prices stay too high too long, will leisure travelers or other travelers that aren't as loyal or will they turn away? And then, for travelers, if you've got the ticket and you have plans, have fun, enjoy your trip.
Well, Nic, that's a positive spin on all this. Thank you for coming to the table and discussing the summer travel outlook.
Thanks for having me.
That wraps up this week's episode. Thanks for making this show part of your day. A couple of reminders. Give Investing Insights 5 stars on Apple Podcasts to help others find the work we're producing for you. And subscribe to Morningstar's YouTube channel to watch new videos from our team. Thanks to Senior Video Producer Jake Van Kersen. I'm Ivana Hampton, Editorial Multimedia Manager, Morningstar. Take care.